Let's be honest, in today's high-volume, subscription-based world, you could be firing off millions of invoices a month, and on every single one of those, the tax has to be perfect. Getting it wrong? That's not just a little oopsie, it's a massive compliance nightmare. So how on earth does a system as powerful as SAP Convergent Invoicing manage all this complexity? Well, let's find out.
Okay, so here's our game plan. We're going to follow the entire journey of tax from start to finish. First, we'll look at the how this system even knows which tax to apply in the first place. Then we'll get into the what, how it crunches the numbers. After that, we'll cover the where, what your customer actually sees on their bill. We'll also tackle some of those tricky what-ifs, and then finally wrap it all up with the key takeaways.
First things first. Before a single calculation can happen, the system has to answer a really basic question. Which tax rule applies to this specific transaction? This whole process is what we call tax determination.
Now, at the absolute heart of this whole thing is something called the tax code. And you gotta understand, this isn't just a tax rate. Think of it more like a master key. It unlocks a whole set of instructions for SAP, not just the percentage, but exactly where the money should go in your accounting system and how it all needs to be reported for compliance. It's a really big deal.
So how does it find the right code? Well, the system basically acts like a detective. It uses a bunch of clues to find the perfect match. As you can see here, it's looking at everything: your company, the country of the sale, and even specific details about the customer and the product itself. It's this mix of factors that makes the whole thing so precise.
This here is a little peek behind the curtain at the core setup. You can think of it like setting up a roadmap. In the back end, you're basically telling the system, hey, when you see revenue from this kind of source, it needs to follow this path to find the right tax code. You're just connecting the dots between your revenue and your tax rules. And the beautiful part is, you set it up once, and it just works, automating millions of future transactions.
Okay, so the system has its instructions. It's found the right tax code. That was the how. Now comes the fun part, figuring out the what. You know, the actual dollars and cents of the tax amount.
And the great news here is this part is completely automatic. The system just takes the net value of your billable items, that's your taxable base amount, and applies the rules and the rate from the tax code it just found. No manual calculators needed, which, is absolutely essential when you're dealing with invoicing at this kind of scale.
But what if your internal reporting is a little more complex? Maybe you need to split that one tax amount across different divisions or profit centers inside your company. Well, that's where the tax item split comes in. It's an advanced function that lets you break down that single tax line item for much more detailed financial reporting.
All right, the internal work is done. The numbers are crunched, the accounting is all lined up, but honestly, none of that matters if the final invoice is confusing or, even worse, doesn't meet legal requirements. What the customer sees is just as important, and that brings us to tax display.
So, where does this control come from? It's all managed by what's called the application form. Just think of this as your design canvas. It doesn't matter if you're using SAP's Smart Forms or Adobe Forms, you have total control over exactly how that tax information looks and feels to your customer.
And you can get really specific with it. You can show the basics, right? Like the taxable amount and the final tax. Or you can go way deeper and display the exact tax rate, the tax code itself, or even those complex breakdowns required by different tax jurisdictions all over the world. And just like with tax determination, this is all driven by how you set things up. You define your invoice layout, you assign that layout to a specific invoicing process, and you maintain the keys for how the tax is displayed. This makes sure the right layout is used consistently every single time.
But hey, we all know business isn't always standard, right? What happens when you're dealing with unique global requirements or weird exceptions to the rule? Let's dive into the what-ifs and see how the system can handle those special cases.
This slide is a perfect example of that complexity. While some tax info is pretty universal, almost every country has its own unique rules. If you're in Europe, you probably need a VAT number on there. In India, it's a GSTIN. The system is flexible enough that you can add these country-specific fields right onto your invoice form to make sure you're compliant locally. And get this, compliance can get so detailed it goes right down to the last cent. It's kind of fascinating that even something as simple as how you round a number could be a legal requirement that's different from country to country. Your system has to be configured to handle these tiny but absolutely critical local details perfectly. But what if your company has a business rule that's so unique it isn't covered by the standard setup?
For that, SAP gives you what are called enhancement points, or events. Think of them as little hooks where your tech team can add their own custom logic. Maybe you offer a special tax break for a certain type of customer that isn't standard. An event is where you'd build that logic. And here's a pro tip. Always check the SAP notes first. It's a massive knowledge base where SAP posts solutions, and there's a pretty good chance someone else has already solved a problem just like yours.
Phew! Okay, we've covered a lot of ground. Let's pull this all together with a quick summary of the whole end-to-end process we've just walked through.
This slide right here is basically your cheat sheet. It pulls everything we've talked about together and maps out the entire process. You can see that clear, logical flow, starting with the determination logic, moving through the automatic calculation, all the way to controlling the final look on the invoice, and of course, handling any special adjustments. Think of this as your one-page blueprint for the entire tax lifecycle in the system.
And we'll end on this final thought. Tax is never static. Regulations are always changing and business models are constantly pivoting. A well-configured system isn't just about getting tax right today. It's about having the flexibility and the agility to adapt to whatever comes tomorrow.